What up, y'all? It's your boy Degenerate coming at ya July 18th, 2019. Today, I want to talk to y'all about where Bitcoin's at. Shocker there. Since yesterday, I have also decided on exposure to traditional markets, and I'll discuss how I went about that and my reasons for it. But I'll get to that at the end. And right now I'm just going to jump in. This is the Bitcoin that we're looking at right now. I'm gonna brighten this up just a bit. Cool. So this is the monthly. We have like 12 days left in it. And you either have a bullish cause or a bearish cause for each of them. And for me, if this closes halfway through this candle and there's more volume than last month, that's bearish. If it closes below this candle, here at 85, let's just call it 85.50, that's even more bearish. You had an aggressive 13 show up the month before, and you didn't have the strongest close. The wick's all the way up here at 14K. But it closed down at the second candle wick. But it's still 12 days away, and I would expect a pullback. This could be it. But I can't, right now, trading this monthly is in like nowhere land. Like, let's be real. I'm not going to place any trade based off of just this. But we can go to the weekly chart. And this is where I start to have more strong feelings. Bullish case for me is if this closed at like 10.6 halfway through this candle the previous week, or greater. Anything above this, bullish, 100%. It could be a bull fake out, fuck it, so always manage your risk. But if on Sunday, when it closes, if it's above 10.6, I'll close my shorts. I'll go back into a long and I'll re-short at a later point. Higher, back up to 13,000. Bearish for me, 10,000 or less. Where it's at currently, or lower, because this previous candle right here engulfed this week's candle. There's an aggressive 13 right here, which means a 1 to 4 candle correction in most cases. I don't know if I would call just this in itself a bear market. You just had one candle, like, you know, this shit did the same exact thing. So this previous week, it totally just engulfed it. If this week comes up here and engulfs 11.6, that's hella bullish, 100%. But I'd be willing to say it's bullish even if it closed like up into this like 10.6 range. Especially if it's close to the top of this wick. But bearish anything below 10. Especially the closer it gets down to the bottom of the wick, even more bearish. Your RSI, not looking good. I'm telling you it's oversold. It's coming back off of that territory. And that's normally when people short. So, George Soros, I'm looking at you. The 3-day, let's look at that. At the moment, on this 3-day candle, this 3-day candle started today. And, yeah, this is like a bullish spinning top, bearish spinning top rather. It could be a little bit tighter, but there's still a good amount of volume. And it closed below the previous week, and that closed below the previous week. I know this only reached to a 7, but you still have a 4-period correction. So if you're looking to long, if you are looking for a long, I would wait for this 3-day, which is going to close on the 21st. I would want to close above 10.2. And if it doesn't close above 10.2, I'm going to call it shorter. All of it shorter. If that did happen, or if it just glanced above 10.2 and you were looking at a trade, that would be your trade right there. And you would be coming up here, and at that point, you'd only be looking at a 3-to-1 risk-reward ratio if it hits the highs. But that's how you be safe, you know? If you want to bring it a little bit closer and enter more of your account, I don't know what the odds are on that statistically, but this is where I would expect a lot of bids to be stopped at if it closed above here, personally. But that gives you a 6-to-1 risk-reward ratio, and that might be worth it in your trading plans. So, again, the 3-day, bearish above 10.2, or bullish above 10.2, bearish below 10.2, but especially below 9,000. If it comes down here, if this 3-day, what's today, Thursday? Friday, Saturday. If it's closing below 9K, dude, sorry, you weren't at a short. One day. Let's keep getting smaller and smaller time frames. You have 8 out of 9 periods at the moment closed, and This is the level I care about right here. Up here at 9.4, 9.5, 9.530. This candle right there, that 9.530 at the very top, that low. If this, okay, let me break this down for you. This is a 1 through 9 count, and if this next 1 through 9 count closes below the previous 1 through 9 count bullish, I'm sure there are more people selling, like guaranteed more people selling than there are people buying. Because if there are more people buying than selling, 9 periods over a 9-day stretch or over a 9-hour stretch, or whatever chart you're looking at. If you're looking at minute charts, I don't know how seriously I would take it. But over a 9-day period, if it closes below the previous 9-day period, that's a long time for sellers to be overpowering buyers. At that point, I would expect a 1 to 4 period correction, and I'd be looking for a short. Just my opinion, this consolidation upwards normally happens before another downtrend. Like if this closed up here above 10.8, sure, there's a long right there if you're playing that daily chart. There is a decent amount of volume that transferred here compared to the previous day where it dropped so much. But on the 1 day, if the 9 closes above 9.5, I'd close my shorts and I'd look for a long. I think. If this closes below 9.5, yeah, fuck it. At least take profit on your shorts if it's gonna be above here on a 9 count. So not today, but tomorrow, whenever it's, you know, UTC time 000 in your neck of the woods. Just pay attention to where it's at. And if it closes above, maybe consider looking to re-enter into a long. You could have your stop loss real close to the low, and that's okay. At least through a couple periods. Just my opinion. But if it closes below 9.5, that's a real key level. Like we're at 97.86. If you want to place bets both ways and then close it, depending on which way it breaks out, that might be a smart move. But if it closes below 9.5, presently, I think we'll have started a downtrend. I think I could definitively say, oh, it's below 9.5. It's a downtrend. And that's going to be in 2 days from now. The last two things I want to look at are the 12-hour. I drew these lines a little bit ago, but this is where we're at in the range. This was the range that looked like it was developing up here at 13,000. And down here at like 10,000. And you can see we hit this 10,000 mark, we started a rebound, we broke through it. That was a real that's a dead cat bounce if I've seen one. It came below. Could it be bouncing off of this? 100% it could be bouncing off of this area right here. I want to know the next time it crosses below 9.3. 100%. Hit me up. Let me know when you're in the area. And I want to know when it goes above 12,650. But these two lines right here, you can see on the 12-hour, sellers came in at this 10,000 area, and then they came in at this 10,000 area again. And we had more volume in the previous 12-hour period than we did in this 95 to 9100, 9070 area. And this 12-hour has 30 minutes left, and we have like zero volume coming back up. When I'm thinking about that, it could be because it's the middle of the week, you don't have retail buyers at the moment. It could be a plethora of factors. This could just be a low volume day. It could be like this before it goes on to higher highs. But the way that this looks like this, which also kind of looks like this. I'm not saying that it's gonna go down, but there is in my opinion, a reason to hold your shorts and just see where it goes. And if the time frame that you're playing, it flips on you and it becomes bullish, then close at least some of your shorts. Maybe take that profit and fund it into a long. Just think about it. But we already broke out of this range. And when you break out of a range, the ideal place to short, it comes at the retest of the range, which seems to be what people are doing. So if this closes above it definitively at like the 10-2 level, you're bullish. But until then, no. So if you're in this position, I have, in my opinion, two strategies. I can short sell to fund my next long, or I could hold cash to fund my next long. But if I'm just holding Bitcoin here, I don't have a real reason to be long on this. Let's go further down the time zone. That's not continually rejected right there at that price. Whoa. And that sucks for real. If that's what you were wanting. But the 4 hour hit oversold back down at 9100. You had an aggressive 13 come up. I rebounded shortly after. I didn't get filled on that trade. I was like $20 off. I'm a little salty. If it retests this area, I don't think I'm going to buy 90.56 again. I think I'll buy the low of it at like 8,900, or maybe a little bit lower at like 8,800. But I'm not looking to buy, like, look at when it breaks out of this, it falls like from 11,000. It falls like $800. So if this bounces and it falls and it breaks out of this, where's it gonna fall to? Probably like 83, 8,400. And what's over there? Is anything over here in this area? Like, you have something like 8,800, and you have something at like 8,000 developing. But I wouldn't be looking to buy anywhere between like 88.69 is literally would be my first long at this point. And that's fine. I will set my long right there. Yeah, that's fine with me. I'm sorry that the music stopped. I really appreciate those Joy Sore boys. But anyway, this is my opinion on Bitcoin. I don't really have a case to be bullish at the moment. I want to see where these two develop. These two on the daily develop. And then I'll make my case and size into a trade. Let's see. I'm going to go ahead and... Fuck it. We'll just listen to this again. Anyway, I'm gonna compare managing my own account to traditional mutual funds. That's what I want to start at today. So I picked out two. I picked out a large cap value fund, and I picked out a fund that just tracks the S&P 500. And I picked both of them because of their low expense ratio. A lot of funds, a lot of mutual funds will charge you about 1% of your money that they manage. And there's only like a 30% chance that they're going to do better than the market. Like historically, having a good mutual fund manager is not, they're just not worth their dollars. Like, you may have a really good mutual fund manager and you may find them and they may be hot for a few years, but like the chance of it you don't know. And you could always end up historically worse as well. But I don't care. I want a dollar cost average into something because when we look at things like the S&P 500 or a value fund, this is what we're looking at. This looks like trash. Okay? I know I just put my money into this, but this looks like fucking trash. Look at it. Oh my god. Let's see, back in January 2018, it hit these highs, it got rejected. Back in September 18, it hit these highs, it got rejected. Back in April, it got rejected. In July, it got rejected. And you know, it's coming back down right now. That is my alarm to tell me I should go bike. But, I'm gonna keep going. So my goal from this is to dollar cost average my entire IRA contribution over the year. And it's put on some semi-monthly buys rather. So it's gonna buy in $125 on the 5th and $125 on the 20th. And it's really just gonna spread out the risk for if it does come down, it's gonna buy those dips. And if it does go up, it's not gonna make as much profit as putting it all in at the moment. But look at this. Like, why would you buy this at the chart? If this is your chart, how could you justify buying something that people have bought down at $24 at double that? A couple months ago, you had an aggressive 13 show up. You've had lower lows on the RSI consistently. You have less volume coming in. There's not a substantial amount of volume coming up to this level. This did not engulf the previous candle. It looks like it's coming down from here. So I have a real hard time going all in with my IRA right now so that I could track the return, so that I could tell y'all about it. So I'm going to dollar cost average and then calculate the return that I currently have myself based off of where we are in the month. And I'm going to compare that dollar cost averaging method on a traditional market to just managing your own cash, playing one asset class, and hopefully y'all can view it and make your own decision on what works best for you. This right here over the long run gives a lot more access to the passive investor, I believe. It's done that in the past. It's allowed mom and pops to retire. I just don't like the speed at which it's happened so far. And it may happen faster in the future, but I don't know. I don't know what happens next. And that's okay. But I hope that you manage your risk just like I'm managing my risk when I buy the top. I think that's all I got for y'all today. I'm gonna update y'all on how the large cap value ETF and the S&P index fund are going. This fund, the expense ratio is like, it's not 1%, it's 0.035%. And then the S&P index fund is 0.02%. So not even one, it's like 100th of the price, but you're still getting the same exposure. So the idea with this and the idea with an IRA is you shouldn't be touching it for like, depending on your age, years. So when you do reach 59 and a half, whatever you're putting into it now should have 10x in value. Anyway, manage your risk, live in a way that gives you peace and allows you to sleep, and I hope that this benefited you in your future. If you have any questions at the moment, you can give me a call, you can leave a comment, just let me know whatever you're stuck on, and I'll do my best to get you an answer. That's all I got for you today. I'm gonna go eat a piece of cheesecake, and I'm gonna go bite. Talk to y'all later.